This is the wrap-up for the live market open on Thursday, January 7th. Market turmoil controls markets. Chinese stock markets didn't last for 15 minutes until they shut down because of a crash of over 7%. Oil prices continue slumping, and all this has a huge impact on currency markets. Euro-dollar is looking for a direction between expectations for ECB easing. That means weaker euro and safe haven status, which is fragile for the pair. We've seen it now. We're seeing it 107.75. 108 is some kind of resistance. 107.10 is support. Very choppy there and looking for new direction. Pound dollar leans more towards commodity currencies, extending its falls now, about to reach the lowest levels since 2010, 145.80. It's currently at lows seen last year, but it could fall even below this level. UK Chancellor George Osborne talked about the cocktail of threats to the British economy. And this negative atmosphere is negative for the pound. The currency that clearly benefits from the turmoil is the Japanese yen. Dollar yen fell below 118. Continues down. 115 is support, and also I think it's sort of the line in the sand for the Bank of Japan to begin talking nervously about an overvalued yen. Resistance at 118.20. Dollar CAD, the sky is the limit, reaching new highs as we speak. 141.50. 142 is some kind of resistance because it worked as such back in the summer of 2003. Yes, 2003, not 13. 12 and a half years ago. Of course, everything is related to oil prices. Today we have a speech by Stephen Poloz, the governor of the Bank of Canada. Let's see if he hints about rate cut or not. With these kind of oil prices, it's of course bad for the Canadian economy. On the other hand, the weak Canadian dollar means that Canadian goods are attractive for US buyers. Okay. Aussie dollar lost the 70-65 line, after a battle. The 70 level is the next line of support, and then somewhere around 69. Of course, it's China, and China for the Australian dollar, but also building approvals in Australia missed, and this weighs on the Australian dollar. 70.65 is weak resistance, and then 71.50. Kiwi dollar getting also a bit carried away by this stock market rout, but on the other hand, we have an expectation for less production of milk by Fonterra, and less production means higher prices, which means some support for the Kiwi dollar. The bigger moves in currency markets are, of course, the yen. Wow, another fall in pound yen under 172, 171.60. Huge moves in the dragon, the gepi, whatever you want to call pound yen. It's crashing down 170. It lost another support line of 172. I would say the round number of 170 is further support. Similar moves are seen in CAD yen and ASEAN. These are, of course, the commodity currencies vs the safe haven one, the ultimate safe haven one, the yen, and it's clear the winner is clear. The yen is king now. Okay, so these are the moves. We had lots of figures yesterday that are certainly worth mentioning. Hints towards the non-farm payrolls. Better than expected ADP NFP, 257,000, but that was sort of blamed on the seasonals and not so exciting as the initial number seemed. Trade balance was a bit better, less important. US non-manufacturing PMI was a slight disappointment on the headline, but the employment component was quite solid and strong. Factory orders, no surprises. The Fed meeting minutes were perceived as dovish because there was focus on inflation, a significant concern according to the Fed members on inflation. On the other hand, they're not. They don't need to see inflation reaching 2% before hiking again, and that hasn't changed. So that weakened the dollar just a bit, but yeah, I would take. It's not the raw. It's not a reflection of the talks, but an edited and revised and redacted document. Okay, and crude inventories, despite the headline about a fall in crude inventories, which is positive oil. We had a rise in distillates. That means oil that is gasoline ready to burn. And in general, we still have the same supply problems also from Iran, from Saudi Arabia, which are producing record levels of oil. So is Russia. And this is, of course, weighing on oil prices. Lower oil prices, of course, reflect lower demand, worsening global economy. Stock markets are falling. All in all, we have a gloomy mood in markets, and this sets the tone for everything. Okay, it's a bit overshadowing important figures, but tomorrow's non-farm payrolls remains the Caesar, if you wish, of indicators. Today we have a slightly lighter agenda, so watch more for stocks and oil than these figures. Eurozone unemployment rate is expected to remain steady. Maybe I'm hopeful that it'll drop a bit. As aforementioned, Bank of Canada Governor Stephen Poloz talks. Let's see if he hints about a rate cut. Jobless claims as usual. Last time they were disappointing, but maybe it's something seasonal. Let's see what's going on there. And for those trading the Aussie, we have an important figure: retail sales during the night. Okay, so that's it for today. If you have